All right, let's jump straight into this explainer. Today, we're unpacking a really fascinating, honestly kind of contrarian investment thesis around ServiceTitan. It's a tech company that's quietly powering the entire blue-collar economy. Right now, if you look at the financial world, literally everyone is captivated by artificial intelligence and what it means for the future of work. But while all the attention is focused on Silicon Valley, there is a massive digital revolution happening right now in the trucks, vans, and tool belts of essential service workers. So we're taking a deep dive into ServiceTitan. They trade on the NASDAQ under TTAN, by the way, to see if this is a high-conviction, long-term play for retail investors who want to capitalize on the multi-billion-dollar trades economy. Think about it. There's a really stark contrast emerging in today's economy. On one side, you have corporate knowledge workers who are genuinely anxious about AI coming for their desk jobs. And on the other, you have the physical blue-collar trades, which are absolutely booming and, frankly, completely immune to that kind of disruption. We're actually seeing this massive cultural shift happening right now. A lot of young people are looking at the cost of a traditional four-year college degree and deciding, you know what, I'd rather pursue a highly skilled trade like plumbing, electrical, or HVAC. And you can't blame them. You just cannot have a generative AI model wire a commercial building or fix a burst pipe. That physical moat makes the trades incredibly resilient, and it sets the perfect stage for the market that ServiceTitan operates in. So what exactly is ServiceTitan? Basically, it's the digital backbone for these trades. They're essentially building enterprise-grade software for fleets of vans. The company was actually founded by the sons of trades business owners, so it was truly born in the trades and built specifically for them. What they've done is create this comprehensive system of record. They take all those historically messy analog processes, the crumpled paper invoices, the whiteboards for scheduling, the physical ledgers, and they pull the whole shebang into a unified cloud-based powerhouse. They handle everything from customer relationship management to payroll, all in one centralized hub. And they are definitely not stopping at just traditional home repair. Through some really smart strategic acquisitions like Aspire and Field Roots, they've expanded way beyond their roots in HVAC and plumbing. Now, they're serving a massive, diverse array of trillion-dollar essential service industries. We're talking landscaping, pest control, roofing, electrical, you name it. The big takeaway here is that ServiceTitan is taking a playbook that worked flawlessly in one vertical, and they're aggressively and successfully expanding it into adjacent, highly lucrative blue-collar markets. Now, this is where it gets incredibly cool and illustrates their pivot perfectly. They aren't just selling a fancy digital calendar anymore. They're providing an entirely new kind of platform called an agentic operating system. This is where their proprietary Atlas data architecture and their MaxAI platform join forces. They're moving way beyond simple assistive AI, which, just nudges you with suggestions. They're moving toward true autonomous agents. Imagine having a virtual office manager that works 24/7, fielding after-hours calls, booking jobs, and making real-time strategic decisions without a human ever having to lift a finger. But listen, a cool tech story is only half the battle, right? It's backed by an incredibly powerful financial engine. ServiceTitan is one of those rare vertical SaaS companies that's managed to achieve massive scale while keeping their balance sheet completely debt-free. That is a huge deal. They are currently processing over $82.1 billion in gross transaction volume across their platform. That means tens of billions of dollars in real-world, blue-collar commerce is flowing straight through their software pipes. Which brings us to the actual top-line revenue. In fiscal year 2026, ServiceTitan pulled in a massive $961 million in total revenue. That's a 24.5% increase year over year. And perhaps even more importantly, in the fourth quarter, they achieved a milestone $1 billion annualized revenue run rate. Hitting that kind of staggering scale really proves that they're successfully moving upmarket. They're pulling in those large enterprise-level contractors while still fiercely defending their original stronghold in the mid-market. And that scale, it is rapidly building toward profitability, which is obviously absolutely crucial if we're looking at this as a long-term investment. Now, yes, ServiceTitan still reports a GAAP operating loss of $169.2 million for fiscal 2026, but they've significantly narrowed that gap. More impressively, they generated a whopping $94.1 million in non-GAAP operating income. That is a 273% jump over the prior year, alongside $85.1 million in free cash flow. Their gross margins are expanding fast, which proves their underlying business model gets highly lucrative as it matures. So how exactly are they driving that margin expansion? Well, it all comes down to a highly successful land and expand strategy. They consistently maintain a net dollar retention rate of over 110%. In the software world, this is the holy grail. It means not only are their customers sticking around, because let's face it, unplugging the operational brain of your business is a nightmare, but those exact same customers are spending at least 10% more on the platform every single year by adding new features and financial tools. Let's circle back to that artificial intelligence angle, because what's truly fascinating here is how they position it. Max AI doesn't replace the plumber or the electrician. It acts as the ultimate sidekick to supercharge their revenue. In the corporate world, AI often feels like a direct threat to someone's job, right? But in the trades, ServiceTitan is deploying AI strategically to handle all those annoying back-office bottlenecks. That frees up the actual physical technicians to spend way more time out in the field doing billable work. Here's a real-world example of how that flows. Let's say an HVAC tech finishes a job 2 hours early. Boom. Step 1, Max AI autonomously detects a gap in that tech's afternoon schedule. Step 2, it immediately and automatically modulates the company's digital marketing, like, say, ramping up Google local service ads, to find a nearby homeowner who happens to be searching for a repair right then. Step 3, it secures the lead and fills the gap to maximize route efficiency. All of that happens without a human dispatcher ever having to intervene. It's pretty wild. And the early data on this? It's incredibly effective. One cohort of ServiceTitan users actually saw a massive 50% increase in their average ticket size just by using these exact AI tools. When you equip a trade worker with real-time data, predictive maintenance suggestions, and AI-powered sales estimates right there on their tablet, they close bigger deals and they do it way faster. So what does this all mean for us retail investors? Well, it brings us to what analysts are calling the price target paradox. Despite consistently beating expectations, broader multiple compression in the software sector has kept the stock trading in that $55 to $63 range. Yet Wall Street still maintains a strong buy consensus, with average 12-month price targets hovering up between $102 and $114. That implies a potential upside of 75 to 100%. It just means it might take a little time for ServiceTitan to reach its full valuation, but it could really reward the patient long-term investor. But hey, let's do a reality check. Every investment thesis has real headwinds, right? First up, macroeconomic sensitivity. A severe drop in consumer spending could definitely impact the total transaction volume. Second, AI adoption speed. Look, the trades have historically resisted rapid tech changes, so getting contractors to trust autonomous agents might take longer than management hopes. Third, competitive pressure. Giants like Salesforce and Oracle are always lurking with deep pockets. And finally, labor shortages. ServiceTitan's pricing is partially based on the number of techs a company employs. If there's a shortage of skilled labor, their customers can't grow, which limits ServiceTitan's revenue. That is exactly why that cultural shift of young people entering the trades over 4-year degrees is absolutely vital for their long-term success. Looking at the timeline ahead, this is a company that's been grinding since 2007, went public in late 2024, and has now scaled that billion-dollar revenue mountain. But you definitely want to circle June 4th, 2026 on your calendar. That Q1 earnings report is going to be a massive catalyst. The market is going to be watching like a hawk to see if Max AI is truly on track to double subscription revenues per customer like management promised. If they can prove they are monetizing these AI virtual agents, that valuation gap could close very, very quickly. So the final question you've got to ask yourself as we wrap this up, is your portfolio ready to capitalize on a $100 billion blue-collar digital revolution? As the unsexy, AI-proof trades continue to digitize, and as a brand new generation of tech-savvy workers enters the field instead of the corporate office, the infrastructure powering their daily work becomes unbelievably valuable. ServiceTitan has built the operating system for this entire new era. Will you be investing in the digital backbone of the physical economy? I'll leave that for you to decide.